Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. In today's episode, Anthony Power and I are joined by Ben Gagnon. He's the CEO of Bitfarms. They just came out with their Q2 earnings, and we're looking forward to walking through the results along with their outlook and strategy for the remainder of the year. Before we get into it, take a second, smash the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of Bitfarms and what you thought about their quarterly results. With that being said, let's get into today's interview. All right, away we go. Q2 earnings with Bitfarms. We've got Ben Gagnon back on the program, CEO. This has been the first year you've been in the chair, Ben. So the first question I wanted to ask to kick things off today, it's been 12 months in the CEO position. What has been your biggest challenge and your biggest success so far?
Well, yeah, it's been quite the first year as CEO. We've gotten so much done. We did a full reorg of the company, completely strengthened up the management team. We engaged a bunch of strategic partners on HPC. We've done a tremendous amount of work on the BITF side, secured that major financing. We've developed go-to-market strategies on HPC and AI. I think that the biggest success, though, is our pivot to the US. That was a really heavy lift to do the Stronghold acquisition, which was the largest M&A deal in the industry at that point amongst two public miners, as well as selling off the largest site we've ever built, Iguazu to Hive. I mean, it's completely transformed the company and our portfolio and our prospects rolling forward. Before, when I took over as CEO, we were going to be a 55% LATAM company and a 45% North American company by megawatts. And now we're 82% North American megawatts with almost 100% of our growth in the United States. So it's a complete reversal in the direction of the company from kind of this Latin American Bitcoin mining company to a North American energy and HPC and AI company. It's been tremendous transition there. And I think honestly, the biggest challenge probably be the Argentina site shutdown. But I think we've done a really good job with that situation. I think we really negotiated a good outcome. And, I'm really proud of how the team has handled the whole process. It's never an easy situation to be shutting down a site, but I think the team has done a tremendous job with managing the team and making sure that the staff is all taken care of, in negotiating good outcomes with the landlord, in figuring out a path out to recover as much capital as possible, recovering our prepaid deposits on electricity. I mean, this is a really, really good outcome from a quite challenging situation. And I couldn't be more happy with the outcome.
Yeah, we'll cover Argentina in a short while, but obviously the main talking point is obviously earnings just came out, and also because we don't get the monthly operational updates from you anymore, if you can sort of like tie in some of the key highlights from the earnings and what's been happening in operation for the last few months, that'd be really great to hear and understand.
Yeah, I think the big operational updates are, we've ticked the box on the Bitcoin mining side of things. Every miner that we've purchased has been deployed. All the miners that we wanted to run through the repair and upgrade program have been run through the repair and upgrade program. Our Bitcoin mining business is a lot more stabilized at this point. And so I think that's a great thing for us as a business. We no longer have any real meaningful amount of CapEx to maintain the business or build out the business. So there's no equity that needs to be issued to continue growing the Bitcoin side. We've got a very efficient fleet at 17 watts per terahash now. It's one of the most efficient fleets in the industry. And, we're sitting here on competitive electricity prices. So I think our fleet's very competitively positioned now. It's going to be profitable according to our expectations. We put out that kind of sensitivity table on our Q4 deck. We think that we're going to be profitable on this Bitcoin mining business well through 2026. We think it's pretty de-risked from a competitive standpoint. So I think those are the big ones. And then, the big thing to take away from the Bitcoin mining business growth kind of being stabilized is that, we now are able to effectively buy time for the HPC and AI development because the Bitcoin mining cash flows fund the business and buy us the time necessary to build out this new business, right? And so we're really leveraging the strength of one business to build out this new business. And we're able to do so in a way that is very manageable from a financial perspective. We're now sitting on a pretty strong balance sheet, especially relative to our market cap. I think we announced 220 or 230 million in liquidity across cash and Bitcoin. We have the Macquarie facility on top of that. So we're sitting in a really, really strong spot to develop out that HPC business. And we're making great progress across a number of sites. We outlined in the Q2 call progress across, Pennsylvania and thoughts around Washington and Quebec. And, we don't think any of that's really reflected in the share price. So I think the other big thing to mention and to highlight from the Q2 call is the stock repurchase program. We've already repurchased over 10% of the shares available for repurchase under the program. It's not just a program to put out there for some marketing piece. We truly believe our shares are undervalued, and we're putting our money there, and we're buying the shares from the market, at what we believe is a great price.
How is that determined, Ben? I mean, when is the opportunity is made by the company or by the agent who's processing it on your behalf?
So when you look at share buyback programs, I think that there's kind of two ways you can approach it. You can either approach it systematically, or you can try and time the market. I think when you do your research, the best programs, the most effective programs are the ones that just buy systematically, consistently every day, and are not trying to go out there and be smarter than the market or trying to snag an opportunity. So we're subject to some restrictions according to the NCIB program around trading volume limitations, and so we're obviously complying with all of the restrictions under an NCIB, but effectively it's just kind of spread out on a daily cost average strategy across time. And every single day we're in the market just nibbling back at our shares, and so far we bought back a good amount, over 5 million.
Yeah, I mean, we noticed from the updates, achieving this, the 19.5 and now down to 17.7. I mean, the gap there obviously is the Argentina loss that the energy seemed to have stopped in May, and you've obviously made that decision to close that now and move away. In terms of machines and all the other, I don't know if we were just leasing sites there, but what happens to that process now? Are you able to get machines out of the country or to sell them? And with that sort of like uncertainty in the political climate in South America, you've still got 80 megawatts in Paraguay, a country that you've already sold, your biggest site. Is that still a sort of like a viable position for you, or do you expect that to be in the future, maybe maybe move to North America so you have literally all your operations there, or is it more of a less political issue down there?
Yeah, so I think it's kind of two parts to your question. The first was around reduction in our hash rate from the 19.5 to the 17.7. And you're right, most of that came from Argentina. We had over 2 exahash installed and operating in Argentina. So, shutting down there obviously reduces our hash rate. If Argentina didn't shut down, we believe we would have probably hit the 21 exahash figure in May, but because we also deployed, 12,000 miners during the quarter. So we did a couple of different things. We deployed a bunch of miners. We turned off a bunch of miners with Argentina. And then also at the beginning of June, since we weren't chasing this 21 exahash figure with the Argentina shutdown happening, what we ended up doing was we readjusted our miner configs, pulled them back for summer weather, improved our efficiency and our profitability as a result. And so, we've had a reduction in hash rate, but it's partially offset by, the improvements in those other figures. Our direct hash costs improved almost 5% by the changes that we've had with the fleet. So it's across those 2 buckets. And then the third bucket would be, the miner repair and upgrade program. So, we upgraded just over 10,000 T21 miners into about 8,500 S21 plus. About 65 or 6,400 were from Argentina. The rest came from a bunch of other facilities. And what we determined was that instead of redeploying those in our facilities, it was actually going to be a better financial decision for us to just import those into the US and sell them off for cash, which is exactly what we're doing right now. So there's a little bit of hash rate reduction as well from taking those miners out of the repair and upgrade program instead of redeploying them, selling them off for cash. But I think it's a pretty good outcome for all of those different strategies and initiatives that we've implemented. And on the miner side, we've got roughly $25 million of miners to sell that we should expect to recover in the near term. So it's a pretty good outcome. So in the Iguazu situation, we were looking at a site that we hadn't finished completing, that we didn't have the miners for, and it was going to require a meaningful amount of capex for us to complete the build out, to secure all the miners, import and deploy. And when we're looking at the opportunities within our energy portfolio of where we want to be allocating capital, we just thought there was a lot better opportunities towards allocating capital towards Pennsylvania, HPC and AI than Paraguay and Bitcoin mining, giving our choice of options and assets to really focus on. And then in the situation of Argentina, the site was non-operational. We haven't had electricity restored since May 12th. We've got rising costs across the country in energy and labor. And it's been a fundamental macroeconomic shift from when Milei took over, or I mean, even going back from when we first invested in Argentina to when Milei took over, and then, even more recently with the Argentina IMF deal. There's a lot of companies there who had structured their entire finance departments around this imbalance between the official FX rate and the unofficial FX rate, which was there for decades. And, when something is there like that, it's a structural thing in place. You structure your finance around it. And when that blows up overnight, like happened with the Argentina IMF deal in April, a lot of companies found themselves in the liquidity crunch in Argentina. And that's just what happened with our electricity supplier. So, that's something that's going to still take a very long time, I think, for them to sort out. And in the meantime, we were able to cut back those expenses, reduce the uncertainty, and recover all this capital for reinvestment in the US. So I think those are very different situations than, Paraguay, which remains operational and generating nice free cash flows. The site is running quite well. The team is doing well there. And so, those are completely different buckets. And, really, that's what we're looking to do, maintain the Bitcoin mining side that we have, and really focus all of our efforts on developing out the HPC side.
One final question on Argentina. I mean, I looked at the accounts in your management document that you put out as in line with your accounts. I mean, it had a figure of about 48.8 million in terms of the cost of Argentina to the accounts. I'm assuming, is that a line now under that, and there's no more anticipated future costs to go into future quarterly accounts, or you expect potentially more costs coming out as you continue to depart from that area?
We still are going to have some staff there while we're doing the site shutdown. So we have 17 operational staff who will remain with us through the shutdown in November. We still have the back office as well in Argentina, which also supports the Paraguay operation, which is remaining in place. So there's still going to be some costs out of Argentina, but costs are going to go down quite dramatically with the shutdown, obviously.
Okay, thank you.
Makes sense. Yeah, appreciate the detail on South America and on the Bitcoin mining component. I wanted to transition now into the HPC AI. As you've mentioned many times, this is really the focal point of the company moving forward. Before we get into the specifics around Panther Creek and some of the developments there, Ben, I wanted to just get your overarching thoughts on the PJM market itself. We have a lot of our miners that we cover in the ERCOT market in Texas. We've learned a lot about how that market works. PJM seems to be extremely desirable, a great proximity location to some big urban areas. Can you tell us a little bit about the market itself?
Yeah, I think over the last couple of weeks, there's been a huge explosion in interest in Pennsylvania for good reason. This is a big energy state. It's very pro-business. For a purple state, surprisingly, there's a lot of alignment around kind of questions around data centers, energy, and economic development, even across the aisle. But you look at our energy portfolio, and our energy portfolio, is really centered in these unique data center hotspots, or in Pennsylvania's case, the emerging data center hotspot. And I think what everyone is interested in is, a few things. It's one, Pennsylvania has robust energy access, and that's true for both electricity generation. It's also true for things like natural gas, which can be used to complement generation or be used to fuel the backup power capacity. And then the other thing is that the cooler climate is a huge benefit, because a megawatt in Pennsylvania is worth more than a megawatt in Texas. The reality is that if you have a higher PUE, you are not going to be generating the same amounts of revenue per megawatt that you will when you have a lower PUE, right? Because more of your electricity is now going towards direct revenue generation as opposed to supporting a piece of equipment doing generation, right? And so, megawatts in cooler climates that have more efficient electricity and cooling costs are worth more. And then the third aspect really here is this fiber piece. The big data center alley in Virginia is largely kind of built around the defense industry, but also around how fiber infrastructure has been developed. And that's true both kind of domestically in the United States. It's also true for connections to Europe with the deep sea fiber optic cables. And on one of our slides in the deck, we put kind of the undersea fiber optic cable map, and we just highlighted, the areas in which we operate, just to highlight the fact that, we've got access to these major undersea data, like deep sea fiber optic cables, in the Washington side towards Asia, and in Pennsylvania side towards Europe. And Quebec also has a similar proximity to Europe, but it's really kind of in that Pennsylvania region where they have that huge boost in fiber. And that's something that I don't think people talk about as much, but those deep sea fiber optic cables are also really, really important, because a lot of traffic passes through those resources and that infrastructure. And the closer you are to that, the less of a bottleneck you have, and the more efficient communication you have across the oceans. So there's a lot of advantages to PJM. We've seen like $90 billion in recent commitments, and 20 billion of those came from Amazon. It's like 40 miles to the northeast and the southeast of our Panther Creek site. In core, we've announced 6 billion, 30 miles southwest. And so, we identified these assets in Pennsylvania. We said, look, there's just robust energy infrastructure. We can expand the energy capacity. We can, look to more generation options. There's all this great proximity to the markets and the fiber. And this is exactly what, all the major hyperscalers and players in the space are underwriting as well. So it's really nice to see that development. It's not a surprise to us, because that's what we underwrote the Stronghold transaction on, but it's certainly great to see the validation coming in from the major players like AWS, CoreWeave, and others, that they see the exact same opportunity in Pennsylvania that we do.
Yeah, the interest seems to be pouring in, and Anthony and I have covered many of these big headlines recently talking about the Pennsylvania market. So right place at the right time, so to speak, Ben. Now, you've mentioned the Macquarie financing in partnership with Panther Creek. We just got a press release recently talking about your new partnership or next partnership with T5 Data Centers, or Tier 5. I'm not sure if it's a play on the tier rating there, but can you talk to us about this next step in the development progression of the HPC strategy, what T5 Data Centers does, and how this is going to propel you to that next step?
Yeah, so it's really important for Bitfarms when we're getting into the HPC side of things to be really realistic about, what our capabilities were. This is a completely different industry than we've ever operated in. We're not overly confident in things that we, haven't done before. And so we said the best way to ensure better outcomes is to work with the right strategic partners who do have the experience and they do have the understanding and they do know how to get all these things done. And so I think that's what we've done, across the board here. I mean, we've gauged the right strategic consultants for helping us develop the business internally, for helping us develop our go-to-market strategies, for raising the finance for the build out. And now with T5, what we have is a great partner for helping us to manage the construction process and drive the construction process forward. And that's really important part of the whole process here. We need to ensure better outcomes, and we ensure better outcomes by working with these right partners. And when you're having these customer conversations that we're having right now, having the right group in there makes all the difference, right? For a group like Bitfarms who has great assets but hasn't developed them before, to bring in that confidence with the right third party is a game changer.
Yeah. And final one from me here, then I'll let Anthony jump in. I saw on your deck you've obviously been meeting with local business leaders in the Pennsylvania area. You mentioned it's a purple state. You're getting support from both sides of the aisle. Can you talk to us a little bit about what you're seeing in terms of the support, the adoption from the local business community and politicians in that market, maybe compared to or contrast to what we just talked about in South America?
Yeah, political support there is really, really robust. We've had a lot of meetings with state senators and state representatives at the Capitol building in Harrisburg. We've had a few politicians, the state senators and representatives out to the site. We're going to be meeting with more politicians over the coming months. And the reality is that, these areas have not seen this kind of investment for a very, very long time. And they are pretty economically depressed because these areas, were largely built on coal and steel, and those industries have largely gone away. I mean, the Panther Creek site itself sits in Carbon County. So you might guess, what was the primary industry there at one point in time? It wasn't windmills, right? It was coal. And this is an area that hasn't seen this kind of investment in decades, if ever at all. And so when we come in there and we communicate to the community that we've raised over $300 million to invest in this site and this location, and to be honest, it's the first of multiple financings that we're going to need to do in order to build that site out to completion. That's a very meaningful number to them. That's meaningful job growth across, every single sector. It's meaningful tax revenues for the city, the county, the school system. This is the kind of investment and economic stimulus that really turns a town around. And so, because of that, we're seeing robust political support all the way from kind of the local level, through the state, through the governor's office, all the way up to the White House, where, Trump was out there with Senator McCormick and Governor Shapiro at the Energy and Innovation Summit a few weeks ago, talking about facilitating these investments, talking about fast tracking permit application processes and infrastructure investments, because they all understand, how great the opportunity is and how meaningful it is to those communities in those areas.
Yeah, I remember about 3 years ago, Ben, I was writing an article for Compass, and I covered Stronghold Mining and the fact what they were doing was, rejuvenating these coal waste sites and turning them into sort of like green sites and getting the benefit from with the local the taxation and getting credits coming back into the organisation to offset the power cost. Is that something that Bitfarms are able to benefit from now with your business there?
Yeah, we still participate in all of those. The plants remain, operational. We still continue to remediate these industrial waste piles that have been plaguing the state for, the better part of 200 years. And it's a huge benefit to the state and to those areas. It really reduces the leaching of a bunch of poisonous and toxic materials into the water supply. And it also helps to, prevent kind of these spontaneous eruptions. So there's a few thousand of these piles spread across the state. And, unless you process the material through, like a power plant like we have, the reality is at some point it's going to spontaneously combust and it's going to burn unchecked and uncontrolled. And there's going to be no benefit. There's just going to be all downside to that. So, keeping those plants up and running is very meaningful, not only on the economic side, but on the environmental side. And so that's why, Governor Shapiro, who's a Democrat, reached across the aisle and did this bipartisan legislation to support the industry and to extend the economic benefits out through I think 2035, because they are so meaningful and they are such important drivers for the community. So those things continue on, unabated, and with the demand for transmission and power in the area, the value of those sites is increasing quite rapidly. When we first announced the purchase, it was August of last year. We didn't know the election results, right? We knew the opportunity in the sites, but we didn't know what was going to happen with the election and what the incoming administration was going to do. But under this administration, there's a huge renewed interest in traditional thermal generating assets, and they're worth a lot more than what we paid for them a few months ago.
In terms of Panther Creek itself, and obviously that $300 potential cash flow through Macquarie, they've released the first 50 million, and there's obviously going to be milestones now to get the remainder of that. Can you tell us from a Bitfarms perspective? There's a couple of things I saw in the update there. Can you explain what the warrants that are issued alongside this are for? Because I know there's obviously an interest bearing across the actual effective investment of about 8%, but there's also some warrants there. And also, what are Bitfarms required? Are they required to match the investment, or is this straightforward 300 million as each milestone is achieved?
So great questions on that. With regards to to the financing and what we have in place there, there's several things that we're executing against. The 300 million, though, just to answer the back part of your question first, the 300 million is just a 300 million facility. It doesn't require an equivalent contribution of economics from Bitfarms' part. What is required is a 50 million equity contribution. So that can be cash or it can be assets into the special purpose vehicle. The reality is that the powered land that we have, at the Panther Creek site is quite valuable, and we believe that it should, deliver the requirements of the equity contribution component. And if it doesn't meet it entirely, it can be met up with a small amount of cash. But the powered land should do most, if not all, of the equity contribution component. And so the 300 million is just a flat 300 million. In terms of the warrants, really what we wanted to get done with the Macquarie piece was get a great strategic financing partner in place, which is what we did with Macquarie, get a cost-effective interest rate in place, which is what we did with the 8%, and also ensure that Macquarie and Bitfarms are aligned in the success of the project. And so that can be accomplished, those last two can be accomplished by some amount of warrant inclusion, which helps to give economics to Macquarie, which helps to reduce the interest expense to Bitfarms, and gets us all aligned on the successful development of the project. And so that's what we've done there with that facility, and we really have secured I think a great partner in Macquarie as a result.
And in terms of the funding to fully refurbish Panther Creek, are you expecting that to be more than 300 million or over the period of time, or does that get you where you need to be until the time where maybe there's an announcement of a client, which will then open more opportunities and doors for further financing down the road? Reason I say that, I noticed from the ATM, I think you're down. I think you're ready right down to about the last over 50 million of the ATM left to use. You didn't use much of it in the last quarter. So you've kept that available. But in terms of the long-term aspects of completing Panther Creek to a refurbished site, what's your expectation on capital for that piece of site?
Yeah, so a few things there. The last time we used the ATM was back in January. I think it was January 24th was the last date that we used the ATM. So we haven't issued any equity under the program since then. The only equity I think that we've issued since that point would have been the equity issued around the Stronghold transaction and anything that we've done for compensation since then. For the CapEx required for the site, what we've communicated is still accurate. Like, we raised that $300 million with the Macquarie piece in order to give us sufficient funds for phase one, right? What we wanted was more than enough capital for us to flexibly run phase one out. And, we have enough money to either build out the first building and a bunch of the powered land infrastructure, or all the powered land infrastructure and some of the first building. Effectively, we're probably going to flex towards the first building. And when you take our expectations for just kind of powered shell economics, it's 2 million to 2 and change million per megawatt. And so for the full 350 that we have there at the site, you're looking at 700 million or more just on the powered shell components. So we will need more financing beyond the 300 million facility that we already have in place with Macquarie. But what we did was make sure that we had enough to complete phase one. And as we make material progress through phase one, we'll look to raise additional funding. There's plenty of capital around for allocation into our sector at the moment. And the more progress, the more execution we have, really the more opportunities at lower cost capital we're going to see rolling on in the future. So we didn't want to oversize the initial Macquarie facility beyond what we really needed for phase one, and get us to that point where we can raise the subsequent facility at hopefully, even better terms.
Thank you.
Yeah, that makes sense. And thanks for the answer there, Ben. The other thing that caught our attention in relation to Panther Creek, you mentioned the ability to potentially unlock additional megawatts, I think 50 next year and then 300 in 2027. Can you talk to us a little bit about how this happens? Is there more generation coming online, or how do you go about actually getting more megawatts, and what kind of rate will this power be at?
Yeah, so we've always advertised that there's 3 buckets of power at these sites. There's the power generating assets themselves. There's the existing grid connection, which we can either use to sell power into the grid or import from the grid a similar quantity of power that we can generate and export. And then third, there was the power applications that we have to expand our grid connection. What we announced in the Q2 call is that we've received the ESAs for expanded grid connection. And we originally expected 50 megawatts in 26 or 27 and 250 megawatts probably in 2028. Now what we have with the ESAs is 50 megawatts in the end of 2026 and 300 megawatts, as early as the end of 2027. So it's more power, it's faster than we originally outlined with the grid expansions. And that brings us up to that 350 figure. For us to go beyond that, there's really, we need to bring in the generation aspect and the existing grid connection. Now, those have been tied up in a bit of a regulatory issue with Talon, FERC, and Amazon. And so when that deal was announced last year, FERC got involved because their primary responsibility is stabilizing the energy grid. And they were worried that the configuration might lead to spikes in energy demand and cause issues with grid stability. And so that's been caught up in this legal issue, which was supposed to be resolved in April of this year. And FERC, in April, basically just postponed any sort of decision and kicked the can down the road. Since then, we've engaged a couple of energy advisors and consultants to help us work through different structures and strategies so that we can actually use that power that we have there on site right now and not have it tied up in this regulatory issue. there's no reason why, with the configurations that we're considering, why it would cause any grid stability issues. If anything, we think there's benefits to stabilizing the grid with the configuration that we've outlined. So, we're optimistic that we're going to get that sorted, but that's how we get beyond the 350 is by repositioning our energy and confirming that structure with FERC, so that we're able to utilize the power plant and the existing grid connections to go beyond the 350. We don't have any certainty in terms of the timeline for that, but that's what we're working towards right now.
Great. And I assume the rate would kind of depend on the mix between the three power generation sources at that point, hey?
Yeah, the rate is based on the local node prices. So, we are basically takers for market at that point. Now, there are ways for us to hedge out the price, but it's quite attractive prices even without power hedges in place. And that could probably be a customer-driven decision, because when we're looking at the HPC and AI structures, power is generally going to be structured as a cost pass-through. And so the decision to hedge really should be borne by the end HPC and AI customer, and not by us as a company who's providing the access to the power, because ultimately it's going to be the end customer who's paying for the power, and it's going to be their sensitivity that they need to manage.
Fair enough. Yeah, and a nice point of differentiation, I guess, from the Bitcoin mining power days as well. Now, the last one for me, Ben, then I'll pass it over to Anthony. I noticed a fair amount of coverage on your Washington site in the deck as well. You had a few slides talking about the multiple different sites, and you had one devoted just to Washington. Obviously, another big economic hub. There's a lot of the Fortune 500 blue chip companies in that area. Can you talk to us about the Washington property as well?
Yeah, so the Washington property is in a really interesting location. It's in the largest data center cluster on the West Coast. So this is almost a gigawatt of capacity. You've got Microsoft there, Amazon, Vantage, a few others, and they were all attracted for the same reason that brought Bitfarms out to Central Washington in the first place. There's this huge surplus of hydroelectric resources. It's like 14.5 gigawatts of installed capacity within a 45-minute radius of our site. I mean, it's just an absurd amount of hydroelectric power. And the county has some of the cheapest power rates in the country for data centers. It's roughly $30 a megawatt hour or less, depending on scale. What happened here is that there's been so much demand for these megawatts that it's created a multi-year long queue. But that means for a company like Bitfarms, who already has this power asset and who can develop it and convert it over with no regulatory red tape or restrictions, there's a huge value opportunity in bypassing this wait list to get some of the cheapest power in one of the most desirable locations on the West Coast. So while the location is smaller than Panther Creek by a large margin, because it's just under 20 megawatts, it's in a really, really nice location that's in very, very high demand. And because it's such a smaller scale site, it's a lot easier to develop, right? It's just a lot easier to plan for. It's a lot easier to raise the cash for. And we target a smaller customer at that site. Hyperscalers are not going to be interested in a smaller site like that, but enterprise customers would be. There's a lot of S&P 500 enterprise customers who need to continue expanding their data center capabilities and their data center infrastructure, but they're not data center companies. They're just companies that have data center needs, and they don't want to build and operate their own data centers. They want to have somebody else build and operate their own data centers, and they just want to have full control. And so the Washington site is really, really well positioned to service these enterprise customers. And that means that, while we're looking at our portfolio of sites, we're looking at our portfolio of potential customers. We're also looking at our portfolio of different strategies and different methodologies for getting HPC contracts in place. And the way that we're looking at it is that, at our larger sites where the scale is very significant, that maybe we're looking at targeting kind of a lower end of the vertical integration spectrum, where we're more on the powered shell area. And then on these smaller sites like Washington, maybe we go beyond the powered shell into the full colo and the full service, because we can do that to greater degree with much less risk, much less capital, and much easier execution than we can do it across, 350 megawatts or the whole gigawatt that we have in Pennsylvania. And that would give us some really nice portfolio diversification across our different sites, across different customers, and across different strategies.
Yeah, interesting. Just switching back to your core business at the moment, which is the mining side. I noticed from the update, you're using a strategy for pledging Bitcoin in terms of when you're buying machines, which a number of other miners are doing. And actually, it's a great opportunity to keep costs down. In terms of pledging, obviously, you're handing over the Bitcoin for that price there, with an opportunity to pay the outstanding amount and then recover that Bitcoin. In terms of the pledge, are you able to highlight sort of what the Bitcoin value was when you did pledge it, and what are the sort of like terms in terms of length of period that you've got to actually effectively buy back that Bitcoin at the price you pledged it at, and how would you go about raising the capital to do that?
So a series of great questions there, Anthony. I'll see if I can remember them all. The Bitcoin options are actually all in the money. We just consider them Bitcoin options because that's effectively what it is. It's a fixed strike option across our 4 different tenors at one strike. We've got strikes ranging across a couple of different prices. We've got one at 94. I think we've got one around 104. I think we've got one around 85 or 86, but that one's the smallest of all the different strikes that we have. But like I said, they're all in the money. We've exercised every option, and effectively, it's a great way to offset the expense of buying the miners, because you can offset the gain on the gain in Bitcoin against the miner purchases themselves. So far, what we've done is we've largely just captured the monetary gain, and we haven't incurred the expense to buy back the Bitcoin. We've just netted the profit. So if we pledge the Bitcoin at 94 and today it's at 120, we're making 26 grand per coin with no capital out the door. Right, it's 26 grand capital in per coin as opposed to 94 out, and that's the way that we've approached it.
Okay, excellent. Obviously, you've highlighted that you're going to relocate offices to New York, and I can understand that with the amount of future investment in sort of that particular area in the US. What do you think it will bring in terms of opportunity for the company? I mean, obviously you've been more of a Canadian-based miner up to now. What are the opportunities by moving to the US that are open to Bitfarms?
Quite a few. I mean, the biggest one is really the access to US investors and US capital. The US has the best capital markets in the world. They have the most capital by far, the most volumes by far, and one of the big ones here is this index inclusion factor. We're one of the few companies that isn't primarily listed in the United States, and that means that we're not included on a lot of the indexes that our peers are. That contributes to a big valuation gap, in our opinion, between us and our peers, because you don't have a lot of this passive buying and holding from the indexes. And so if you look at the institutional ownership of Bitfarms versus the US domiciled entities, it's a pretty sharp difference in institutional ownership, and that's largely driven by indexes and index inclusions. So there's a big opportunity for moving forward and going to the United States, tapping into those big pools of capital with the indexes and with other US institutional buyers to drive shareholder value and create more value per share without actually changing any other aspect in the business itself. In addition to that, there's also a lot of just regulatory and administrative expenses we'd expect to minimize by just being primarily listed in the United States. The primary Canadian domicile creates some inconsistencies sometimes between how Canadian securities regulators want to report or do accounting or enforce whatever restrictions or policies versus how the US does that. And so by having both entities in place, that means that we have to comply with both, and it's more expensive and it's more restrictive than just doing one or the other. So there should be some administrative and regulatory benefits as well. And then, I think the last component here with the US redomicile is that, look at where all of our infrastructure and our assets are going to be. We've got almost 100% of our growth in the United States right now. It's where the company is going, and it makes perfect sense for us to be moving our operations into the United States so that we can be, getting access to those capital markets when we can be on much more standard comparison with our peers. And maybe the last component here is like on the standardization piece. We're one of the few miners that still reports under IFRS. And so when we report under IFRS, the economics of our mining business look very different than a US miner reporting under GAAP and FASB. And so it's much harder for investors to actually compare the two businesses because of the two different ways that accounting is treated for Bitcoin mining. And we think that's going to provide a lot of benefits to shareholders as well. It's just that normalization of our reporting to kind of what is quickly become the standard amongst the industry.
Yeah. In sort of like listening to the news updates today, we've seen a number of updates from TeraWulf, which was meant to be their earnings update, but they've sort of like hijacked that with a number of sort of like big updates in terms of an agreement with Google and purchasing more sites, more power, increasing their capacity. With the sort of like your general feel of how this this apparent shortfall in power to meet the AI requirements over the next few years, do you anticipate more and more of these types of updates over the sort of like next 6 months as people start maneuvering their way to search for this power and align with partners going forward?
I think we're just scratching the surface of the market growth here. This is something that can be really, really big. Will it be as big as, the analysts expect, around 150 gigawatts and 100 gigawatt growth over 5 years? Who knows? But is it going to be multiples bigger than where it is today? I think absolutely. And most of the power is just not there yet. The reality of the situation is there is not a data center built today for the data center needs of tomorrow. And so as this demand increases, that all has to be new builds. It all has to be new power. It's not reconverting over old facilities. I think that's a part that a lot of people don't really understand. It comes with these long-term contracted revenues is an inflexibility in your operations. If I've contracted out a facility for 15 years, I'm not converting it on year 7, right? It's locked up for another 8 years. So if I want to service new demand, I've got to build a new site. And the reality is that there's a lot of disruption happening in the market right now because there's so much demand and there's so little supply. And that's not going to be rectified in the next year or 2 years or 3 years because infrastructure takes way longer to build out than demand takes to materialize. And things can happen in infrastructure and construction, which make timelines take way longer than originally anticipated. So we're pretty optimistic in terms of the supply-demand balance for HPC and AI infrastructure. We think that we're on the right side of it. We've got what everyone wants right now. It's just a bunch of power, and that puts us in a great spot.
Cool. One more from me before Bryce wraps up. Obviously, since we last spoke, one of your largest institutional investors or corporate investors has been selling a lot of the stock, and we've seen from the recent 13DE that was announced, I think earlier this week.
Friday.
That's down to 7.2%. Do you feel this is sort of like a distraction moving away now? Give the full focus to get on with what you need to do with that in the rearview mirror, or how do you see it from where you are?
I think of it as kind of some short-term pain for long-term gain. This is something that I think is going to be great for shareholders once the position is wound down. And we're in the market at the same time trying to buy back those shares. So, we strongly believe our shares are undervalued. And like I said, we're putting our money, where our mouth is. And we've got the balance sheet strength to buy back our shares and develop our HPC and AI business. And that's exactly what we're doing.
Thanks, Ben.
That's great. Hey, we've covered a lot of ground today. I wanted to give you the opportunity to close out, and thank you so much for the time today, Ben.
Always a pleasure to be here, guys, talking about our performance, our earnings. I think the key thing for your listeners to take home is, just how much execution we're having on the side and just how stable this Bitcoin business has become as we transition off into HPC and AI. We're now into a period where, things are stabilized, the uncertainty is gone. And we have a really, really strong foundation that can finance this transition off to a really successful company on the HPC and AI front. And it's just very, very meaningful opportunity for shareholders. Just the Washington site, and it's part of the reason why we spent a decent amount of time talking on the Q2 call. Our belief is that if we develop out the Washington site in the way that we've outlined, with the normal multiples that are kind of applied to deals like that and infrastructure like that, just that one site alone would be worth more than the company is today. And that's one of our smallest sites. So, the opportunity here for investors is quite large. And, for Bitfarms and the management team, it's all about execution. And we think that we've got the right management team and the right strategic partners in place to just really, really do well over the next 12, 18 months as we continue to build out and execute.
Hey, we look forward to watching that execution occur. Congratulations on a very successful quarter on the numbers on the operational front. We look forward to hosting you again. If you guys have any additional questions, leave them in the comment section below. Hit the like button. Feel free to subscribe. We'll see you back here later.